When you think about money, you probably imagine bills, coins, maybe a credit card or a banking app on your phone. But Bitcoin? You can't hold it in your hand. It doesn't rustle like paper. It doesn't clink like change in your pocket. And yet somehow people around the world agree it has real value. Bitcoin was born in 2009 in the wake of a global financial crisis. Its creator, or creators, remain anonymous to this day, known only by the pseudonym Satoshi Nakamoto. On January 3rd of that year, the first block was mined, the so-called Genesis block. And from that moment, the idea of money began to change. Bitcoin is digital money. It doesn't exist in any physical form. It's not printed by any government or backed by any gold reserves. No single institution controls it. Yet it works. People send it, receive it, trade it, save it, just like any other form of currency. But Bitcoin is unlike traditional money in one key way. It's decentralized. There is no central bank, no manager, no chairman behind a desk who can create more of it or freeze your account. Everything about how Bitcoin works is written into the code. Fixed rules, no exceptions. No central authority can interfere with it, manipulate it, or shut it down. At the core of Bitcoin is something called the blockchain. Think of it as a giant public ledger, a record book that keeps track of every transaction that has ever happened. But instead of being stored on a single server, it's duplicated and shared across thousands of computers around the world. These are called nodes, and each of them has a copy of the full ledger. When you send someone Bitcoin, your transaction gets broadcast to this network. These thousands of nodes check the transaction and confirm that it's valid. Once enough nodes agree, the transaction gets grouped with others into a block, a new page in the history book. And once the block is finalized, it gets linked to the previous block. Over time, this forms an unbreakable chain, the blockchain. New blocks are created roughly every 10 minutes. And with each new block comes hundreds or even thousands of new transactions. But who creates these blocks? That's the job of miners, not people with shovels, but computers with processing power. They race against each other to solve a mathematical puzzle. The first one to find the solution gets to create the new block and earns a reward. This reward comes in the form of newly generated bitcoins. And this is the only way new bitcoins come into existence. No printing press, no political decision. Just code, electricity, and computation. Bitcoin's rules are strict. There will only ever be 21 million bitcoins. That's it. The maximum supply is hard-coded and cannot be changed. Every 4 years, the reward for mining a block is cut in half, an event called the halving. This keeps inflation in check and gradually reduces how many new coins are introduced. This system gives Bitcoin a deflationary nature. Unlike fiat currencies like the dollar or euro, which tend to lose value over time, Bitcoin is designed to become more scarce. And if demand increases, that scarcity pushes its value up, at least in theory. Bitcoin's security comes from its network. To alter past transactions, an attacker would need to control more than half the network's computing power and rewrite history faster than everyone else. With tens of thousands of miners worldwide, this is practically impossible. The more people use Bitcoin, the stronger it becomes. When you own Bitcoin, you're not holding anything physical. What you own is an entry on the blockchain, a record that says a certain address which you control owns a certain amount of coins. You control this address using a pair of cryptographic keys, one public and one private. The public key is like your email address. People can send Bitcoin to it. The private key is your password. It proves you're the owner. If you lose your private key, your Bitcoin is lost forever. There's no reset button, no tech support, no way to get it back. It's gone. That's the price of complete control. You alone are responsible for your money. But that also means no one else can freeze it, block it, or take it away. Bitcoin isn't anonymous, it's pseudonymous. Every transaction is recorded and public, but it's not directly linked to your name. However, if someone figures out who owns a certain address, they can trace everything you've ever done with it. That's why some people use mixers, privacy wallets, or switch to coins like Monero that offer more anonymity. Bitcoin has evolved far beyond a geek experiment. Today, it's used by investors, companies, and even entire nations. In 2021, El Salvador became the first country to adopt Bitcoin as legal tender. You can pay with it in stores, save it on government-supported apps, even withdraw it from Bitcoin ATMs. To some, Bitcoin is a revolutionary investment. To others, it's an escape hatch from inflation and centralized control. To many, it's a symbol of financial freedom, money that belongs only to you and no one else. But it's not without risks. The price is extremely volatile. It can drop or rise by 10% in a single day. Regulations vary wildly from country to country, and using it securely requires at least a basic understanding of how it works. Despite all that, Bitcoin is still here, still running, still processing transactions. No downtime, no CEO, no headquarters. And maybe that's the most incredible thing about it. Subscribe us for more videos.